back to the ETF Inspector. It's Friday, August 22nd, about 4:30 in the afternoon. I'm recording this video a little early. This is the Saturday morning video talking about all the trades I made this past week. But we're going to be out of town for a travel soccer tournament, so I'm trying to get some work done ahead of time. Markets are closed, so I'm done trading, and so I can make this video to talk about how I did. Update on the channel, since this is kind of my personal video. We don't talk about anything ETF related or anything like that other than if I own it. But 4,100 subscribers. We broke the 4,000 mark this past week. And then I'm on X at ETF_Inspector1, and I broke the 1,000 follower mark on that, so that was kind of cool. This was a funny little thing I posted today. They start their shorting fund, and then a market day like today happens, and everything's green. So, but yeah, normally it's just posting. It's still stock, ETF, trading, options related, or YouTube pointing back, letting you know when videos come out. Okay. I've been making the announcement, keeping talking about it. Not Ulti. LFGY is possibly on the chopping block. I may start, eliminating that coverage, and also the once a week Saturday videos on the 7 individual income funds, possibly on the chopping block as well. This one here, just lots of time and effort for not a whole lot of views happening on those, as opposed to some of the others. So the Roundhill funds, they don't get a ton of views either, but they take very little time and effort. And then obviously Ulti's the big one, and it gets lots of views. But all right, so let's go ahead and get into how I did trading this week. It was not my best trading week, I'll say that. So we'll start off. I have that leap. I started the year with 3 leaps. I'm down to 1. Poor man's covered call actually starts with a leap. Bought a deep in the money call on Intel. The plan was to just keep on selling out of the money calls against that leap to generate income off of it without having ever had to put up the $2,200 in the first place to buy 100 shares. Intel's not supposed to spike like it did, but it has. So it's gone against me in a good way. It's gone against me up. That's better than down. So initially, I had to put $895 into it. So instead of $2,267, that's what it would have been to buy 100 shares back when it started, I put $895 into it, and then I've been selling calls since then, with chipping away at that initial $895 investment, hoping to get to the end and have paid them off, or at least paid off enough to where when I go to close out that leap, there's a profit there. But somewhere along the way, Intel jumped up past my strike prices, and by a lot. And so this most recent one, as you can see, last week's expiration at 22, this week. I sold it previously. I sold it about a month ago for 22. It expired today, and I had to roll it. And of course, the price skyrocketed up to $24.80. So instead of closing it out, I just chose a far enough out place to close and roll it. So I had to pay $2.58 per share to close it out. So in order to get a credit, because that's the whole name of the game here, just keep getting credits, I sold out till September 19th. And I wanted to roll it up a little bit. I'm trying to chip away at that. So $22.50 now. So if it gets assigned, I'll get $50 more than if it would have got assigned at the 22. And I picked up a little bit more. I don't know what was the difference, like $7 minus fees. So it's not really going great. But at the end of the day, currently, if I were to close the whole thing out, it would just be this difference right here. $13 and no, that's not supposed to be a sum. Sorry. So I would collect $7.39 per share, or $739, and I have chipped away from that 895 down to a 678, money in. So it would be a profit. It'd be a pretty small one, not probably worth all this effort, but it's better than something going against me the opposite way where it drops and everything's worthless. So made $7 basically trading this week. Not the best, obviously, and it expires January 16th, so I'm not going to have too many more months to be selling out on this before I need to either roll this or just close the whole thing out. I'm leaning towards closing it out, but we'll see. Next up, I have a wheel strategy running on a couple different things. First one being my favorite, IonQ. So I've been rolling this cash secured put for a while now. Last week I had sold a $39 put expiring today, Friday. When you're watching this, it'll be Saturday. And I'd collected $1 per share, $100. I closed that out yesterday. Unfortunately, obviously, if I'd have known the market was going to skyrocket, I'd have been trading differently. But again, it was past my strike. So I had to pay $2.14 per share, $214 to close it out. And I rolled it again to the following week, dropping my strike to 38 and receiving 226. So a $12 difference minus the fees. So again, not doing great on the weekly income. $12 on the first one, $7 on the second one. Kind of avoided assignment just because if it would have been real close to the strike, then I'm fine. I'll get assigned and I'll start selling calls. But I don't want to get assigned when it's multiple dollars below the strike and I instantly can't even get any good premium to sell calls. So I'll just keep on chipping away. That's why I dropped my strike price to 38. Okay. But with today's up market, this put that I sold for 226 per share yesterday would only be 78 cents per share to close out today because IonQ ran back up over 39. So I've got a $38 put. So most likely this will be able to be closed out kind of early next week for minimal cost, and I'll sell another one. Next we have Mara. So last week I had sold a couple of puts on Mara at $14 and $15. They were expiring. I closed them out each for a penny because they were not in the money. Penny each, so a total of $1 on each one plus the fees. And I sold new ones. I kind of joined them in the middle. I went 14 and 15 before, so rolled them both to 14.50. It was just at different points. That's why I didn't combine them on one line. One got rolled yesterday, the other today. Unfortunately, I should have rolled both of them yesterday because I got a whole lot more for the 14.50 yesterday than today. But $28 yesterday, 13 today, minus the 2 and the fees. So nothing special, but not bad. And these are already able to be closed out today for 8 cents per share. So they're both going in my favor, but obviously every put you got's probably going in your favor at this point after how today went. The last wheel is on open door, and just like the theme on this, everything's kind of like running against me. So I had the covered call sold for $250 that was expiring this Friday. I had to I closed that and rolled it, paid $1.11 to close it, and sold it out till September 19th on the roll for $1.36. So I picked up a $25 difference, kept the strike price the same. Not sure why that didn't come up as currency there. But the stock just kept on running all day. So it's now at $5, and I'm just perfectly fine with, I hope that these get called away and I don't have to sit and look at this option for the next month with it being the stock 100% above. my strike price. But at the end of the day, it's still a profit, right? Basically, I am out $131, but I have 100 shares that are going to end up getting sold for $250. So it's going to be almost $120 profit at the end of the day. But obviously, when you're running these wheels, you'd like it to kind of stay a little closer, and you just keep on selling close to the money calls and collecting maximum premium. You don't get in this situation where you're paying more than you received. But I just make sure that I roll far enough out to get a credit. I'm not attached to these. I just wanted to get some more credit before they let them go. If I'd have let them go today, then I would have just got the $250 minus the $25 more that I collected today. So I'm fine with it. I'll keep taking free money in the meantime. All right, that's it for Poor Man's Covered Calls and Wheels. Now I've got spreads. I was not able to sell any new spreads this week, so these are going to both look like losses on the week, even though I won both spreads. First, I had a put spread on Hood where I sold the 105 put and I purchased the 100. It was a $5 spread. I collected $125 on that. Got a text message from my brother. We've been talking about these. He did a very similar trade. I don't follow a lot of things like the Fed talks and things like that, like he does. So he texted and said, "Hey, with this trade being razor thin, if the talk goes against you, this could get ugly." So I had a choice to make. The stock was right around 105, 106, something like that. It was still fairly pricey to close out, but I was in profit territory. So I could choose to pay $80 to close it out after receiving $125. Just lock in. You made $45 on the trade. That was one option. I could wait and see if it expires worthless, which it did, so I could have kept the full $125, but measured the risk to reward. If the market took the opposite direction turn after the Fed talk and that dropped, I could have to pay $500 to close it out, the $5 spread. So it was spend 80 and lock in a $45 win, do nothing and possibly have a full $125 win, or do nothing and possibly have a $500 loss. And it wouldn't be 500, it'd be 500 minus 125, so $375 loss. So I decided, we'll call it the smart decision or the safe decision. I spent the 80, closed it out, locked in the $45 win, only to immediately watch the stock market take off and make these worthless. So, but that's okay. Not the end of the world. It ended up being a profit. And let's see, $42 over 9 days is $471 a day, or 8% per day, or 344% per year. So at the end of the day, if you're going to get upset about a 344% annual yield, I don't know what to tell you. Next up, I had a put spread on Upstart. I had sold that last week. It was a closer spread, $2 spread. Sold the 60s, purchased the 58s, and I received $50 for it. Closed that out today for a total of $3.09 difference. So I received $48.66 after fees and paid $309 to close it out. Obviously, Upstart closed well above 60, so it was nowhere near in any trouble. And that was a $45.57 profit, which would be $6.51 per day, or 22% per day, or 1,188% per year. So I'm still overall in the red trading spreads for the year. This was my first year working on it, and I got nailed a couple times that I'm trying to recover from. My really only goal is to chip away and get that into the green by the end of the year. All right, that's it for that. Last of all, we've got the dividend page. Now I do have a little bit of options. Since we're talking options, we'll keep on talking options for one more point. I have some high yield dividend funds, and sometimes I trade options off of those as well. And the one I did this week, I sold a 1 month put on Ulti for at a $6 strike, and it was already below 6. It was at 585. So I received 40 cents per share, or $40 for that. And I would be happy to basically be paid $40 to buy shares of Ulti at 6, because that would mean I'm basically buying shares at $5.60. So obviously Ulti had a rough week other than today, and a rough end to last week. So the put premium started increasing. Obviously it was only where is it? It was only 15 cents below 6, and I got 40 cents per share for it. So I will take it. I'm happy to buy below my cost average. So that'll be the first line there. I brought in 39.33 in dividend options. We already talked about Mara, right? Closing and rolling those 14s and 15s down to 1450s for next week. Collected 37.62 there. IonQ, it was a smaller swap. It was like $12 minus fees. Robinhood, just talked about with the spreads. It was a cost today, this week. I took in the full 125 last week. I'm showing the 81 expense this week. Upstart, same thing, brought in the 50 last week, had to pay out the 309 this week. So big picture, they were both wins, but money-wise, cash flow-wise, they fell in different weeks. And then Open Door, it was another 25 minus fees to roll that one out. That's going to end up getting assigned. So the only thing left to talk about is this week's dividends. So for starters, I have Nestle. They paid me $49.97 in dividends. They're part of Group C, I believe it was, that just paid today. So that goes into the dividend income. And then I have YMAX that paid me $34.39, and Ulti that paid me $160 even. So those three dividends, 2 weekly pairs and 1 monthly pair, combined to $244.36, resulting in an overall $271.30 coming into my trading account this week. Not the best week, nothing to brag about, but just talking over it. The only change in any of these funds, right, as you can see, I've gotten rid of a lot. That's why I've got 0 shares next to Apley, AMZ, USOI, YMAG, and CLM. Now I just have Nestle, Misty, YMAX, and Ulti. Ulti being the greatest. I purchased more shares of Ulti this week, so now I'm up to $16.50. I've brought my cost basis down to $6.09. Closing price was $5.74. So they're underwater capital gains wise by $577 total, yet they've paid me $506 just this month, and I've had them long enough for them to pay me $1,124. So I'm up not quite 600, whatever that is, $540-ish in a couple of months on that. So that's why you got to look at total returns. I'm not upset. I'm not worried about the fact that the price has dropped by 500 while it's paid me over 1,000. I'll take it. So overall for the month now, we've got a few weekly payments in from Ulti and YMAX. I've received the Misty payment, and so when I received the Misty payment, I didn't have the extra 100 shares. I got to sign them later, but I believe Misty's paying another dividend this month, so I'm going to have 212 shares getting paid at the end of the month, I believe. 212 shares of YMAX too. That was an accident. So I've still got more payments of Ulti and YMAX and Misty all coming this month, and we're at 859 so far. That'll obviously increase and get up over 1,000 before the month is over. Trading account balance overall down just a little this week from last week. I think it was 27.5 or 27.6 last week, so I'm down to 27.4 now. All right, that's everything to do with my trades. So I guess that's it. That's all I got for you. I got a dad joke. My daughter told me one right before I started, so I said I'll use that one. But thanks for watching. Appreciate everybody. Again, I'm getting a little bit overwhelmed with a lot of the time with everything, so I've kind of cut back. I still read all the comments, but instead of answering every single one of them, I'll probably just kind of like put a heart on it, unless you like asked me a question or something, or said something that kind of like requires a response. But I'm still reading everything, and that's I want you to know that. I appreciate everybody. So thank you all. So, dad joke of the day: why can't you write with a broken pencil? Because it's pointless. I was kind of embarrassed that I couldn't figure that one out when she said it, but all right. Hope you guys have a great weekend, and root for my youngest daughter as she's playing in the first travel soccer tournament of the season. Goodbye.